What's going on, everybody? Brad, the Mortgage Dad here to help you find out, are you getting a good deal on your mortgage rate? So that is the biggest question we get as mortgage lenders is, am I getting a good rate? So I'm here to help you out with that, and I'm going to show you where I send all my clients to help look at rate options to see where their rate falls compared to the average. And then I'm going to show you some ways to look at rates on another site, but to be careful what you're looking at on that site. So right here, CFPB rates. If you Google that, the first link is where I send all my clients. Now, CFPB stands for Consumer Financial Protection Bureau, and they are there to help you as a consumer with any financial transactions. So buying a house, pretty big financial transaction. So we're going to look at this first site here. This is where I send all my clients, and it's going to tell you to explore your rates and shop around, which is fine. That's great. But this is actually what we're looking at. So this is the meat and potatoes of this site. So there are parameters over here that you'll need to complete in your state, wherever you're at. First thing you need to know is what your credit score is. So for our services, for the point of this video, we are going to look at the 760 to 779 range. Now, I live in Kentucky, so I'm going to pick my state, Kentucky here. I'm going to change the down payment to 5%. We're going to keep the purchase price at $200. Look at 5%. Of course, you can change that to whatever house you're shopping for. We're doing a fixed rate loan for 30 years and a conventional loan. This is just for example purposes, but this is the information we want. So in Kentucky, the average is 5.5% for a conventional loan with a 760 score. You're going to see a range of rates down here. So if you click on the green bar of these rates, it will actually show you how many lenders in the state are offering this rate. You got 1, another 4, 3 here. And I tell my clients, if you're in this back half of the spectrum, then we're doing good. Usually it's a bell curve, but rates are kind of volatile right now, and they're constantly changing. Sometimes they're changing multiple times a day, depending on what the market is doing. But this is where you want to be. You want to be on this half of the spectrum. And this is the rate that I want to tell you to be careful for. So if you're shopping for that rate, and you keep getting these rates, there may be a reason you're not finding this rate or getting the rate that you're looking for. So this is where I send my clients. They're not trying to sell you any information. They're just trying to provide you the information to make a wise decision. So the other great thing about this site is you can actually see how much you'll save from one rate to the other. So we're going to let's look at these two rates, 5.25 and 5.375. And just say, all right, they're going to give me a little bit better deal at this lender. How much is that going to save me? So, not a lot. This is the line you really want to look at, not so much this one, and I'll explain. So in the first 5 years, going with that lower rate, you'll save $1,200. $1,200 for 5 years. That's not that much. So most loans don't go past 7 to 10 years in their lifespan. You're either going to refinance or you're going to move. One or the other, more than likely something's going to happen. And refinance doesn't mean necessarily you refi for lower rates. Maybe you have a lot of credit card debt, you want to get into a lower interest rate. Use the equity in your house and get that credit card debt and that lower rate. Refinance. This cost over 30 years, $5,400 is a lot of money. Over 30 years, it's not that much. And more than likely, you're not keeping this loan 30 years. So this is a more accurate representation of how much you're going to save. And I'll tell you, if your realtor referred you to a lender that they know, they trust, they provide a good experience, is it worth saving $1,200 over 5 years to go with some unknown lender where you may or may not experience that? You may not get called and let you know updates. You may not know what's going on. They may not explain documents. So I'm going to tell you to make a wise decision on who your lender, who your mortgage advisor is. Somebody who's there to advise you and make sure you're in the right product and getting the right information, that's a good loan officer. Somebody who's here just to tell you a number and move you on to the next step of the process, that's not very good. Make sure you find you a good loan advisor. Someone like myself, maybe. So, down here, one more thing I want to show you. Shop around, consider your options, and negotiate. A lot of people may not know this, but you can negotiate or try to negotiate your rate. Now, negotiating your rate comes with a couple things. If you've got a rate quote from another lender that you're trying to go over here and say you like, oh, Brad, I love working with you, man. We just get along really well. The rapport seems good. You seem like you're a good communicator. I want to work with you, but this lender over here is offering me 5.125 and you're offering me 5.25. Can you match that? Well, if you have a paper quote, so a fee sheet, a GFE, good faith estimate, whatever their lender's calling it, something that shows the interest rate that they're quoting you with fees along with it, if you have that form, by all means, give that to the lender you want to work with and say, hey, can you try to match this rate for me? Matching rates in the mortgage industry is not black and white. We have to be very careful when we're trying to match rates, because if we're going to give you a special deal, we got to make sure the next person that walks in with the same parameters as you gets the same deal. So there's a lot of legalities behind it. If you don't have a paper quote from another lender and you're just telling me what the quote is, I'm not even going to entertain it. Neither will the other lenders. If you have a paper quote though, give it to them. Give them a shot to try to match it. Just because you didn't get that deal from the get-go does not mean they were trying to screw you over. Like I said, a lot of legal stuff goes behind giving rates out, and we have to make sure we're staying within those legal boundaries. So, if they can match it, great. If they can't, don't get mad at them because they couldn't. Is it, again, worth the $1,200 difference to go with somebody you don't know or somebody that someone else didn't trust? If you got referred to a lender by a friend, realtor, and they've had a great experience, just weigh that option. You're making the biggest purchase of your life, buying a house. It is the biggest asset you will own. Make a wise decision. Don't try to nickel and dime or discount that process, because you may get discounted service. So, now, there is other places to shop for rates. Bankrate also is a place where people go to shop rates. Now, when you're shopping rates with Bankrate, just be aware people are trying to advertise and get you to call them. So, when you look up the information, we've got the same information here that we had at the CFPB website. But if we look, these rates are on the way low end of that spectrum. 4.625 was the low end. Here we're seeing 4.75, 4.875. It's like, man, these lenders have it. Now I've cut off who the lenders are just to, protect them. I'm not here to try to say they're doing something wrong. They're doing one thing. They're trying to get you to call them. They're showing you this rate, but what a lot of people miss is this section right here. So, you're going to see this word right here, points and upfront costs. So, if you want this rate, you're going to have to pay 1.712 or points or 1.712% of the loan amount in additional cost just to have that rate. Now, I'm not saying it may not be worth it. That's where having a good mortgage advisor comes in. Every deal is like a fingerprint. It's unique in itself. It's never the same as somebody else's. That's why you should never compare your loan to a friend's, because it's never going to be the same. But is it worth paying these points to get this rate? Where's your break-even point? Figure it out with your mortgage advisor. How much will you spend up front to start saving money? At what point will you start actually saving money for buying this rate? So be careful when you're shopping rates that you're not paying a ton in points. And you'll see APR here too. So APR, it's more of kind of an easy shopping rate. It's going to look at your rate and the fees from the lender and kind of put them all in one number, so you can kind of quickly see who's maybe got a better deal. You're going to see that this rate is higher. The points are higher, and so your APR is higher. But if we keep scrolling, we're going to see this guy right here. 5.25, a little lower than the average, 0 points. That's going to be the usual rate you get quoted by lenders. We're going to give you what's called the par rate, or 0 point rate. We do that because that's the cost, that's no additional cost to you. Now, my clients, I always try to go a couple percentage, a 0.25% lower, and say, here's what that cost is to go a little bit lower rate. And what you also don't see on here too is that if you pick a higher rate, you can get a credit towards your closing cost. So for a lower rate, you can pay more towards closing costs, so you're paying for that rate, or the lender can pay you to take a higher rate and kind of cut off some of that closing cost up front for you. Again, it's not for everybody, and I'm telling you this so that you make a wise decision. Talk with your mortgage advisor. Find out, are you charging me points? Is this the 0 cost rate, the par rate? What if I wanted a couple grand off of my closing costs? What rate would I get then? We have to figure out, does it make sense for you? Are you going to be in the house long term? Is this a starter home? With these rates right now, do you think they'll drop in the next 7 to 10 years and you might refinance? It's a discussion you have to have, because it's not just black and white. There's a lot of stuff to think about, and having the right mortgage advisor can mean a whole ton. So when you're out there shopping rates, just be careful that you're not getting points and nobody's maybe mentioning it to you, or they're expecting you to read the form that says you're paying points. Make a wise decision in your rates. CFPB.com or CFPB for the rates, Consumer Financial Protection Bureau. It's got a lot of good information in there for you. So just out here trying to help you make the decision on, are you getting a good deal on your rates? So I am Brad, the Mortgage Dad. This is my first video, so hopefully be nice to me. Out here just trying to educate and protect you, the consumer. So I work at Loan Depot. I'm a sales manager at Loan Depot. I do live in Lexington, Kentucky. My contact information is on my website. If you go to bradthemortgagedad.com, you'll find this site right here. If you want to get a pre-approval, I'm licensed in Kentucky, Indiana, Tennessee, and Ohio. But if you're looking out in some other state, I can definitely get you with one of our awesome Loan Depot consultants. So we're here to protect you guys. Again, Brad the Mortgage Dad. Hope you have a freaking awesome day. I plan to. Let's go kill it today.